Today we shall be discussing about Form 15G and 15H. These are the forms for income tax relief to save the deduction of tax at source. See, first of all, the Form 15G and 15H, they are self-declaration forms. We fill the form and declare it ourselves. This 15G and 15H, this is not a certificate. We use these forms to save the deduction of tax at source. Now you have heard the word TDS, tax deducted at source. By fulfilling the forms 15G and 15H, we will be able to save the deduction of tax at source. That means the tax will not be deducted at source if I fill form 15G and 15H. They state that my income is below the taxable limit and therefore I should be exempted from the tax. This form states that you will mention your income and you will declare yourself that your income is below the taxable limit. Since your income is below the taxable limit, it does not fall into the tax slab. Therefore, please don't deduct my tax at source. The crux of the declaration is that the estimated income of the previous year in which the relevant income is to be included in computing the assessee's total income is nil. Please listen to this line very carefully. We will be computing the assessee's total income in this year, right? The assessee's total income will be calculated in this relevant year. The income will be taken of the previous year and we are declaring in this form that my income of the previous year is not falling in the tax slab. That is why I don't need to get the tax deducted at source. This 15G and 15H are such declarations which specify that we don't fall in that category. So we should be exempted from TDS. Now, what is the income eligible for filing 15G and 15H? First is the interest income under section 193 and 194A. They are eligible to be filed 15G and 15H. Rental income under section 194I. Dividend section 194. Now the dividends are also taxable. Life insurance maturity section 194DA. Provident fund withdrawal 192A. Interest from post office and the insurance commission under section 194D. All these incomes mentioned are eligible. For these incomes, you can file form 15G and 15H. We don't have to go to the income tax office to file these forms. You don't have to go to any government department, to any income tax office. No need to go and file those forms there. Where have you to file them then? You have to go to the relevant taxpayer and submit 15G and 15H not to get tax deducted at source. Let us take an example. X has to give a rent of 3 lakh to Y. Now it is Y's income, right? Y will submit 15G and 15H to X to save his tax from being deducted at source. This is just an example I have taken of 3 lakh rupees. Will it be eligible or not? That we will talk later in this article itself. But my point is that if you are getting income from X, then you have to file this form. You have to fill to X. You don't have to go to income tax office. You don't have to go to any government department to submit your form 15G and 15H because it is a declaration for tax not being deducted at source. So where will you file this? You will file it at the source. At the source, who is giving you the income? That person. You have to deposit this form to that person who is giving you income. In this example, X has to give a rent of itna to Y. So Y will submit it to X. Okay. Now, difference between form 15G and 15H. Both these forms have same purpose, but there is one difference. Form 15G is submitted by a resident individual whose age is below 60 years of age during the year as mentioned in the form. If you are under 60 years of age, then you will be filing Form 15G. And if you are above 60 years of age, that is senior citizens and super senior citizens, then you will be filing Form 15H. Okay. A senior citizen can fill the Form 15H even when the total payment to him or her exceeds the basic exemption limit. This is one more major difference between Form 15G and 15H. First difference I told you that people below 60 years of age, for them it is Form 15G, and who are above 60 years of age, it is Form 15H. Another major difference is that even if the senior citizen is beyond the exemption limit, still he can file 15H. If you consider 15G, you have to be in the basic exemption limit, only then you will file the form. But in this case, even if you exceed the basic exemption limit, still you can, that senior citizen can fill the form. Let us take an example. This is Mr. K. He has a fixed deposit in the bank. Age is 40 years. Because he is under 60 years of age, which Form 15G is applicable to him? His interest income is 3 lakh. Now 15G is very well applicable, but the bank will not accept his form as his interest income exceeds the basic exemption limit of 2,50,000 rupees. This is the main difference, because a person who is under 60 years of age and his income is above the exemption limit, so 15G will not be applicable. In the second case, take Mr. M. His age is 65 years of age. Which form? 15H, because he is over 60. Interest income is 3,50,000, which is above the exemption limit of 3 lakh. But the bank will accept the Form 15H. Why will he accept it? Because this is another difference between Form 15G and Form 15H. For a person to file 15G, no doubt he has to be below 60 years of age. This is the first condition. The second condition is that you have to be in the exemption limit. If you cross the basic exemption limit, 15G will not be applicable. But in this case, the case is different. First condition, you have to be over 60 years of age. And second condition, even if you are beyond basic exemption limit, you are applicable, you can file Form 15H. This is another basic difference between these two forms. Now, who can use these forms, 15G and 15H? These forms, they can be used by an individual, by HUF, Hindu Undivided Family can use it. It can also be used by trust or a society, for example, a housing society. These forms cannot be used by companies and partnership firms. No company can use Form 15G and 15H. No partnership firm can use, and no LLP, limited liability, also they cannot use Form 15G and 15H. Okay. Next. Who can use 15G? The resident individual. You should be a resident Hindu Undivided Family. Resident HUF can use it. Who are below 60 years of age, as I told you. Income below the basic exemption limit. Another criteria is your income should fall below the basic exemption limit. Tax on your total income should be nil. If your total tax on total income is nil, only then you can file Form 15G. Who can use Form 15H? Only resident individual. HUF cannot use this form. Who are above 60 years of age, that is senior citizen, super senior citizen, as per Income Tax Act 1961, they can use it. Income below the basic exemption limit and tax on the total income is nil. Okay. Now validity. Both these forms are valid for 1 year and they need to be submitted every year. Once I fill the form, it is valid for only 1 year. It is not that once I have filled it for lifetime. It is not like this. You have to fill it every year. You have to submit it every year. Who cannot use 15G, 15H? NRIs, non-resident Indians, they cannot use these forms. TDS will be deducted according to their provisions of Income Tax Act 1961. Their TDS will be deducted. You cannot use 15G, 15H. Secondly, a person whose total income, total payment of the prescribed nature from the relevant payer exceeds the basic exemption limit, cannot use this form. Applicable to 15G, not applicable to 15H. I told you 15G के लिए your basic exemption, you have to fall in the basic exemption limit. If you cross the basic exemption limit, 15G not applicable. Okay, but the criteria of basic exemption limit does not suit to 15H. 15H you can still fill the form 15H because you are senior citizens even if you are beyond the exemption limit. How to fill this form 15G and 15H? They can be either filled manually, you can fill it with your hand and then you can submit it to the relevant taxpayer, to the deductor, or you can also fill it electronically. How will you fill it? Log in to the relevant bank or the financial institution and then submit the form. Okay. Now, as the dividend is also taxable, so in case of companies, you have to submit the form to each and every company whose shares you are holding. For example, if you have the shares of 20 companies, then you have to log into 20 different companies to save tax deducted at source. You have shares of 20 different companies, you have to log into 20 different companies to fill this form and to save your tax deducted at source. If a company does not allow to submit the form digitally, then you have to send the form by registered post to the corporate office of the concerned company. Then you have to fill it the form, physical certificate, and then you have to deposit it, do it by registered post to the corporate office of the concerned company. Now, if these forms are filled physically, they should be submitted in 2 copies. It is also a condition. The non-submission of these forms will result into the deduction of TDS. Okay, supposingly you are having an FD in the bank and you are supposed to fill this form 15H, 15G and submit it to the bank so that it does not deduct your tax at source. Supposingly you were not able to submit this form, then what will happen? Your TDS will be deducted. You will have to file your income tax return in applicable ITR form in order to get the deducted amount back to claim the refund. Now, once your tax is deducted at source because you did not fulfill these forms and you want to claim that refund, then you have to file your income tax return in the applicable ITR form. The income tax department will be pleased to file your refund. It is not that once you forgot to fill in these forms, your tax deducted, so deducted. No, it is not like that. You can very well claim it and income tax department will refund you. However, hence both these forms are very important to you if your income is below the minimum taxable limit. So they are very important and you should fill these forms. These forms are normally submitted at the start of the financial year so that everything happens accordingly in an organized manner. So fill these forms at the start of the financial year. What is the last date of filing the form 15G and 15H? See, no last date is fixed. However, such form must be filled and provided to the payer on or before the date of deduction of tax at source. You have to fill it in time. Only then the person who is going to deduct your tax, he should have the form with him. Only then he will not deduct your tax, otherwise he will deduct it. You can submit this form in the first quarter, second quarter, but you should prefer to fill this form at the earliest. But if the tax has been deducted due to the non-submission of the form, then the payer is not liable for the return if your bank has deducted your tax at source. Now, later on, you go to the bank and say, oh my God, you have deducted my tax. See, I have filled the form, but I forgot to submit it to you. Then the bank is not liable to return your amount. Then it is your own headache. I told you in the previous slide, then you have to fill the form. So it is always advisable. You should fill these forms well in time. The single form is to be filled for 1 year. If there are different pairs, then each pair must be provided with different form. If you have FDs in 20 different banks, then you have to fill these forms and submit it to 20 different banks. Okay. Next year, each financial institute has to submit this form. Again, next year comes, again you will submit the equivalent number of forms to equivalent number of financial institutions if you want to save your tax being deducted at source. Now, the forms need to be submitted to every branch of the bank where the money is deposited by the depositor. You have to fill it at every branch. If you have fixed deposit at different branches of Punjab National Bank, PNB, then you will have to file these forms in all the branches of Punjab National Bank where you have fixed deposits. Be very clear. Wherever you have kept your investment, everywhere you will be getting income from that very branch, that very institute. You have to provide 15G, 15H. These forms can be submitted at the start of the year, and in case you missed it, then you should contact the branch for the submission at a later date. And if there is time, then you can give them at a later stage, but you should give them well in time. These forms cannot be submitted directly to the income tax department, but they have to be submitted to the deductor. I told you, the person who is going to deduct your tax, you have to submit these forms to that deductor. Don't go to the income tax department to submit these forms. Question arises, how will you download these forms? You will go on this portal, incometax.government.in. Here, e-filing, you will open it. Go to the downloads, this point, and then you can download form 15G and form 15H. A very simple way, you can just open this portal and you can download it. So here we come to the end of the article. I hope I have explained the things very clearly to you. In case you have any doubt, feel free to ask me in the comment section. Please like and subscribe to my channel. Thank you for watching. Stay safe, stay blessed.